Hi, I'm Keon, a research analyst with Lipper, and I'm here to speak to you about fund flow activity for the week ended Wednesday, April 29th. Let's start by taking a quick look at last week's market activity. The broader equity indexes were both relatively flat. The Dow Jones Industrial Average lost 2.7 points, while the S&P 500 index was down 1.1 points. In market news last week, the Federal Reserve issued a statement following their two-day policy meeting, which left open the possibility of an interest rate hike as early as June. This came directly on the heels of poor first quarter GDP numbers, which saw the economy grow by only 0.2%. The Fed wrote off this poor first quarter performance due to what they called transitory factors, which they defined as a longer than expected winter for much of the country, a strong dollar, as well as falling oil prices. The Fed also reiterated that they expect the economy to grow at a moderate pace for the year. Let's turn our attention back to fund flows now. Overall for the week, we saw net aggregate outflows of $5.1 billion. This aggregate data includes both mutual funds and ETFs. Let's take a closer look at our macro groups for mutual funds now. Equity funds had net outflows of $1.6 billion for the week. Taxable bond funds, positive net inflows of $1.8 billion. Muni bond funds took in $401 million in net new money, while money market funds saw $8 billion leave their coffers last week. Let's take a closer look at our equity mutual fund group now. The $1.6 billion in outflows marks the fifth week out of six of net outflows for the group. Once again, we see that the outflow activity is dominated by domestic equity funds, which had $3.3 billion in negative flows last week, while non-domestic equity actually had positive flows of $1.7 billion. Taking a closer look at the domestic equity group, we see for the year to date, the two largest outflows are coming from large cap core funds and large cap growth funds, which have seen $12 billion and $10.5 billion net leave their coffers so far this year. Let's move on to equity ETFs now. Overall for the week, equity ETFs took in $2.3 billion in net new money. This is the third week out of four of positive net flows for the group. The largest net inflow last week belonged to Deutsche Xtrackers MSCI EFA hedged equity product, which took in about $610 million, followed by PowerShares QQQ, which had net inflows of $580 million. The largest net outflow for the week belonged to the iShares Russell 2000 ETF, which saw $660 million leave their coffers. Moving on, let's take a closer look at taxable bond funds now, starting off with the mutual fund group. As stated before, they had $1.8 billion in net inflows last week. This is their 18th consecutive week of net inflows this year, and boosts their year-to-date positive inflows to $28.8 billion. For the second consecutive week, Core Plus bond funds and core bond funds contributed most to the total net inflows. This week, Core Plus took in 1.4 and Core Bond took in 1.3. Let's take a look at our taxable bond ETF group now. Slight outflows from this group last week. $61 million left their coffers. Largest outflows belong to two high-yield products, the first one being the iShares iBox high-yield corporate bond ETF, which had $500 million leave their coffers, and followed by the Spider Barclays high-yield bond ETF, which had $220 million leave. Largest net inflow on the week belonged to the iShares JP Morgan USD Emerging Market Bond ETF, which took in roughly $190 million. Moving on now, let's take a closer look at our Muni Bond Fund group. Overall for the week, $401 million in net inflows for the group. This marked the second consecutive week of net inflows on the heels of three consecutive weeks of net outflows. In this week's activities, national munis once again contributed the most to the net inflows with $327 million, and single state muni products contributed $74 million to the total. Let's move on to our last group now, money market funds. As mentioned earlier, the group saw $8 billion in net outflows last week. It is their fifth consecutive week of net outflows, and it brings their year-to-date net outflow to approximately $128 billion. The biggest contributor to last week's net outflows was the institutional money market group, which saw $11.7 billion leave their coffers. Well, that wraps up this week's report. If you'd like to take a closer look at the data for yourself, please join us at www.lipperusfundflows.com, and please join us here again next week where another Lipper analyst will be speaking to you about that week's fund flows activity.